What is up, guys? Back for another YouTube video. Today we're going to be going over weekly profile. I have recently stumbled upon this and have found that it is ridiculously powerful. And if you want to get into trading, if you plan on doing it as a career or in the future, you need to know this, and it's going to make your life so much easier. So just a quick overview of what we're going to be looking at, right? So this top one is the bearish version, obviously, which is open, high, low, close. And this is the bullish version, open, low, high, close. Basically what we're going to be going over is how this plays out and like what to look for so that you know in advance prior to it happening so you can take trades based on it. Recently, right here, this week, the 24th, we had a perfect open, high, low, close. So we're going to go over that. And if we can find an open, low, high, close, then we will do that. So basically what you're looking for is some type of PD array that we can manipulate into at the start of a week. And then based off of that, following Monday, Tuesday or Wednesday, we'll usually put in the high or low. And then from there is where we distribute. So that's where we go towards the drawn liquidity, which is over here. So we get the open, we manipulate Monday, Tuesday, and potentially put in the high Tuesday or put it in Wednesday. And then we distribute the rest of the week, take out our drawn liquidity, and close. Same thing over here. We open. Monday we manipulate into the PD array that we want to see some type of reaction off of. And the beginning of the week through Wednesday, we're going to put in the high, and from there we will distribute to our drawn liquidity. So what are we looking for over here, right? So price only moves two directions. We're moving from internal range liquidity to external range liquidity and vice versa. So then external to internal, right? So there's only two ways that we can move. We need to know that. So the one we're going over is obviously bearish. So what am I looking for coming into that week? We have this weekly fair value gap, right? That's our PD array. That's what we're looking at in step 2. There's our PD array. What are we thinking about down here? Like, we have a bunch of low resistance liquidity that we should be taking out. We have a bunch of drawn liquidity, right? So we want that, we want this, and we even want this. And obviously, some time has gone by, and you can see hindsight, we took all of that out. So when looking at it, this is how you decide if you're going to go up or down, or what the probability is between the two. So obviously, during this week, we took out internal range liquidity. So what are we looking for? External range liquidity. So the two places that we are going to go after is either this right here, this drawn liquidity, or this one. In your guys' opinion, what makes more sense? We have no PD arrays below. We have a bunch of low resistance liquidity, and it's just closer. Like, this would be ridiculous to ask of the market to move that many points. That would be ridiculous to ask. So, and you just put yourself in a bad position hoping that that does happen. So the higher probability ask is all these low resistance liquidities down here. Obviously, hindsight's 2020. We take all that out. But even in the moment, it's super simple to see that, right? And once you get some time in the market and you get some screen time, it becomes that simple. So now we will drop down to the daily to check this out. So back to this. We're looking to see where our candle opens on Monday. We want to see it manipulate into some PD array, which is our weekly fair value gap. And Tuesday or Wednesday is going to put in that high of the week or low of the week. And the rest of the week, we can basically, with a great probability, we can guess where it's going to go. So the example we're going to be looking at is one like this. We're going to see an open high, a sweep of liquidity, basically a turtle soup, low close, which is this. And as you can see, this drawing right here is basically to a T this. You see, we come down, we manipulate into our weekly fair value gap, and what do? We come down, take out our draw, close. So coming into the week, this is what we'd be looking for. We obviously see a bunch of low resistance liquidity down here. We want to see this gap tapped into. So Monday, we get this big upward candle. That shows this is our manipulation leg into our PD array. We also leave this gap This is a new week opening gap right here. And Monday also gave us no wick. So there's so many things telling us that we are going to manipulate up and then we're coming right back down. And why that's important is because you can basically plan your week ahead of time. You can plan the trades that you're going to take. It's basically giving you your daily bias for free, all in one, just wrapped like a gift. So understanding where your price is going, having that in your mind, it just makes everything so much clearer. You don't need to be like overthinking anything or guessing because it's all right in front of you. It truly is that simple. So for this, what you see here, right? So we have this gap that we completely, no, I'm tripping. I was looking at the wrong time. My bad. So we obviously have this gap, right? So obviously, after everything we talked about, we know what we're looking for. We're looking bearish. And some people might, let's just pretend for a second, right? Let's pretend someone doesn't know about the weekly profile, about the power of 3, whatever. You might guess because we inverse this daily fair value gap down here, right? We're getting some upward movement, kind of trending upwards. You might think, oh, this is the bottom, we're going to go higher. But to the people who know and understand weekly profile and understand power of 3, to them, this is crystal clear. This is such a basic sell week for them. So, like I said before, we have no bottom wick. We have a gap that we're going to want to fill, and we have a weekly PD array. So as you can see, Monday, we come up, manipulate up, close. That's fine. That's what we're looking for. Tuesday, we come up, we tap into our gap, go a little bit farther, we tap the CE of our weekly gap, and then Tuesday, we put in this high. And what happens Wednesday? Wednesday, we get a sweep of that high. Let's see if we have turtle soup. We get a sweep of that high, and we close below. Now, for daily bias, this is a whole nother video that we could get into, but basically, we swept the high and closed below. Open, high, low, close. So open, high, low, close works for all time frames, obviously, but this is just another, basically a daily bias. If you see something like this on the daily time frame, you're thinking bearish. We were able to take out the high and close below. So we should continue lower. So our next draw would be our low from previous day, right here. And we take that out. And then, so we take that out. So what are we thinking? We're thinking lower. There's no reason we're not moving lower. So then we have our draws down here, draws down here. And obviously, we come and take this out. That was our main draw on liquidity. And what happens after that? We get a nice respect of this fair value gap. And that should happen, right? Because like I said, this is not our only draw on liquidity. We want to see all of this taken out prior to finally moving up. So this fair value gap, this daily fair value gap should hold. If we're continuing down, that's going to hold. And if you see that hold, then you can, with a high chance and a high probability, you can guess that we are going to continue down for a little bit longer. So I don't want to go off on too much of a ramble. I want to stay kind of on topic. As you can see, this is such an easy sell week. We come up into our gap, manipulate. I'm going to bring this down here so we can see it. We manipulate into our gap. So weekly candle opens, boom, come up, tap our gap. This is the manipulation into a PD array. Tuesday and Wednesday, these two candles right here, we put in the high. We see that Wednesday comes, sweeps highs, and closes below. That is bearish all day long. And what do we do after that? Step 4, all we do is distribute all the way down until we take out all of our draw on liquidity. Get rid of these. So it's very clear. And knowing that, if you knew that coming into Monday, you could be like, okay, Monday, I'm going to be looking for longs. I think if we do have a bearish week, we need to manipulate up into this gap. So Monday and Tuesday, you can be looking for longs. You have your bias preset before the week even starts, basically. And then as soon as you see a candle close like this on Wednesday, Thursday comes around and you're like, boom, sells. I'm shorting until this draw on liquidity is taken. That is basically free money. You are going to be printing money if you can understand this concept. And it is so easy to understand. And it takes screen time. I do believe that it takes some screen time, but once you get some screen time in, anytime it pops up, you're just going to be so laser focused on it. It's just going to stick out like a sore thumb, and you are going to be banking off it just because you're able to understand something as simple as this weekly profile. So, long story short, right? That was a perfect sell week, which is right here. Open, high, low, close. Boom, Monday and Tuesday, up closing. Wednesday is our turtle soup, and we get to close below. After that, it's over. Just shorting. You don't need to be thinking about anything else. Your bias is set for the day, unless there's some crazy news or something that stops you, or is going to flip your bias. You need to just be thinking, okay, if we're going to finish off this weekly profile, it's going to distribute lower and take out my draw on liquidity, which is precisely what it does. Now, I kind of want to find you guys a quick bullish example. I mean, I guess this kind of works, right? We had to sweep liquidity. We have an order block there. I don't know if we have like a monthly gap or something. Let's see. I need to see where that week even is, to be honest. So I mean, technically we're coming from an order block. I would prefer a fair value gap, but it's basically any PD array that you can find. You don't want to use like, I don't even know, like a change day delivery. You don't want to use, you more want to lean towards a fair value gap. So this is kind of a stretch, but nonetheless. So what we're gonna do is keep this here, and then we'll go down to the daily time frame and see if we can see what kind of open, low, high close we get, right? So let's see, we're going to drag this over. So this week, this is going to be a buy version, right? So we're looking for Monday and Tuesday to possibly come down, put in some type of low in the beginning of the week. Potentially Wednesday. Wednesday puts in a low by turtle souping Tuesday. And what do we do after that? We displace upwards, which is our distribution. And then we take out our draw on liquidity. So, obviously, we took out external range liquidity, right? Right here. We took that out. So where do we need to go? It only moves two ways. Where do we need to go? We need to go to internal range liquidity. Right? So we have a bunch of fair value gaps in which we could take out. And we have this. This is our draw. Oh. Not sure why. Okay. Sorry about that. This is our draw. Obviously, hindsight, we take it out. But let's see what we get here. This right here. So let's see, Monday. Monday puts in the low of the week, okay? Monday puts in the low of the week where we sweep this external liquidity. What happens after that? We see that we go up. We get an open, low, high, close, right? So it might not happen in this exact week, but you can take that weekly profile and expect a bullish reaction from it. So that means within the following days, within the following 1 week, you are going after this draw on liquidity because we only move two ways. We are going to move from this external that we just took out to some type of internal range liquidity. And another thing that you can look at is for a wick like this, you can look for the CE of it, which acts as a PD array basically. So this is kind of like what a fair value gap would be. And it kind of makes sense why we get this huge reaction off it. Right? So we get Monday, open, low, crazy bullish reaction. Like this wick by itself already screams that buyers are stepping in, right? After that, we just get bought straight up, take out our draw on liquidity, which is perfect. And it's exactly the rules, it's exactly the definition of this weekly profile. Where does it open up to? Opens up, takes out external range liquidity in a PD array. And that's step 2. It's manipulating into that PD array. And you can tell it's manipulation because look at the reaction we get from it. It is a crazy wick. It came down, took out the liquidity it needed, and shot back up. And this example, it doesn't need to be Tuesday or Wednesday. It's usually the beginning of the week. So it's usually Monday through Wednesday puts in that high. So Monday, for this example, we put in that low. The rest of the week, we distribute up and we take out our drawn liquidity. It's truly that simple. And when I say it's that simple, yes, it's that simple, but it truly is so powerful. Because knowing something like this, like I said before, you can base your entire week off this. Yes, you need to keep an eye on news. Yes, you need to react to what the market gives you, but this gives you such a good idea as to what is going to happen. And it'll just make your trade so much more seamless because you know what you're looking for and you know where price needs to move to. It is really that simple. So yeah, I mean, there's really not much more to go over. This just, while it is quick to go over, it seems simple. It is, I just want to reiterate how important it is to understand something like this. It stops you from getting misled. Like I showed in the first example, we did inverse 4-hour gaps, daily gap, and we still came right back down. So some people might be like, nope, we're bullish. We just did this, that, and the third. But in reality, no, you know in the back of your head, you're like, this is exactly what's supposed to happen. We are going to move lower. We are going to take out that drawn liquidity because that's how the weekly profile works. And once you have that ingrained in your mind, you won't need to watch videos on this. You won't need to take crazy amounts of notes. You'll just see it and you'll watch it play out. And it's just so helpful to see it beforehand. And that's why I want to get a video out. This is my first informational video. So I hope you guys enjoyed it. I hope it made sense. Leave some comments if you enjoyed. And with that being said, boys, I will catch you guys tomorrow with the trade recap. Peace.